I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. It's a pretty quiet night around the world, with most markets off small. Our futures are down a little bit after 3 down days. It seems like most markets are looking for what's next, Scott. So do you think our markets will be able to find their footing?
I think we're going to look today. You know, as far as being on the 4th down day, you rarely get that in 2013. Unfortunately, though, we're not really that oversold because we were extended. So it's a pretty weird dynamic right now. Last week, we pushed above 1709, went to 1729 on the Fed doing nothing, which was a little bit of a surprise for most market participants. Anyone who says, Brittany, that they were thinking that the Fed was going to do nothing, probably did it in yen terms. But anyway, with that being said, it's a little private joke. You guys get it out there. Well, anyway, with that being said, a lot of people, got lost in the shuffle where shorts that were like rolling it up since September probably covered, only to find themselves not involved with it lower now. People who were trying to be a little risk averse, might have jumped in because they thought, oh my goodness, now we're going to 1750, 1775, and chased. And then now here we are where a lot of people are just a little confused. So, when you're confused as a trader and there's uncertainty, you just want to make sure, you have an edge. And now, at least with 3 down days, we have yesterday's low in a lot of key stocks and in the S&P that we could use for a potential red dog reversal for a tactic and then measure to see if it builds.
Well, why don't you show us a visual then of the SPX?
Let's do it. We do that every day because we like to be consistent, and here you go. There's your visual. There's your pretty picture of a nice trend that's been intact all the way since November. Got tested right here around the 100-day after an outside day that produced a 5% decline, which wound up making new highs. Then you had another false breakout, and you want to measure these false breakouts because if you're active in short term, you can make cash flow to the downside and avoid some of the noise. So right here, broke through this area, couldn't hold above it, came back below, then rolled over. So here's another one where broke above 1709. He was at Fed day, inside day, now 3 days down. So for me, I'm going to watch 1697. If we were to come below it a little bit or match it, come back above, then perhaps buy it versus that to think about if we can continue what's been a really nice trend. Because all that happens here is each time it feels like we get to the upper end of this channel that we've been following since November, we kind of trade off a little bit. So with that being said, sometimes we go from top end to bottom end to top end to bottom end. So traders don't want to get caught buying in the middle where we could retrace a little bit more. And then here is your 21-day underneath, which we'll see if we do touch it. And if we do, we'll see how we act there.
Let's measure the action of some of the sectors that we saw yesterday. We've seen some strong sectors get hit, like the biotechs, which have been among the strongest sectors. We actually saw the biotech group get hit first and play catch up to the downside. So what does this say to you that the biotechs got hit first?
Just means that anything could happen. On Friday, the bios are really strong. Some high beta names are really strong. So some traders that were in that group didn't even realize, oh my goodness, the Dow is down 185 points. So they came in long, feeling comfortable, then whack. Right away, they took some of the air out of some of those names. So we'll see what it leads to. You look at the IBB, which has been very strong. If you look at it way back when from, a year ago, okay, you're not even worried. Look at this trend line, then the accelerated trend line is not even being tested. But if you trade short term and you're trading versus P&L, yes, they could have hurt a little bit. So with that being said, you take a closer look here. What do we have? We have yesterday's low as a point of reference, right around the 8th day, and then here is your 21 days. So we'll see what type of move do we get. Does this ascending channel that broke, lead us to the 21 day and maybe even a retest of the prior highs, which comes in with this other trend line? Or do we hang around? So that's why traders don't want to buy here too early, because if you play for momentum and momentum leaves, you have to get out of the way and then see where more of a swing type trade could be, without buying too early.
How about the transports? The IYT shed about 0.6%. It breached the 8-day, but then was able to close back above it. So does the fact that it was able to close back above the 8-day mean anything to you in terms of showing a little bit of relative strength?
Well, it showed a better relative strength in a lot of other areas.
Right.
So, but again, you want to figure out, will it play catch up quick, like we could see, or does it hold in there and then the S&P turns up and then this is a group to go to? So these are all the things you have to, think about as an active trader. And right here, it held the 8-day right around the prior high. It's, right there's a 21-day and a really nice gap. So the question is, how pent up is this? And, if the shallow or the market pullback is very shallow, this could hold around here. But if the S&P starts to go to the 21-day or the 50-day, this could see a little bit more downside. So here's your point of reference, and we'll have to figure it out from there.
And we often talk about how we like to watch the financials and the home builders for clues about market direction. And the financials, which were weak last week, were a real drag yesterday after failing to make new highs.
Yeah, so, and this group, sometimes you can be upset if you're involved because it's so weak, but sometimes it could give you data to keep you skeptical and keep you out of harm's way. And last week, I started talking to people, and they're like, Red Dog, you a little concerned that the financials aren't making new highs with the S&P? I'm like, it's not a perfect science. There are other groups gaining strength. We shall see. And I actually, I wasn't saying blinded to it, but I didn't really take such notice. But some that did even got short and made money on the down move. But anyway, you look here, the XLF did not make new highs. Okay, I just showed you how, if you look just say at the spiders real quickly, here is that old high, there's your new high. So that's a divergence and a negative one. So with that being said, yesterday when people were looking for a bounce, everyone's like, oh, we're not going to be able to bounce when the financials are so heavy because they were heavy yesterday. But now after 3 down days, let's see if we get some kind of tactical reversal. 2011 is the low. Here is, your other moving average. Wow, it's already almost down to, the 100-day. So it is showing some weakness. So let's see if the XLF hangs in around here and holds this trend line. Perhaps, the market will get its footing, but if it doesn't, you could see more downside action heading into October.
And the home builders, 1.1% loss yesterday, already below the 100-day. And so after 3 down days here as well, what's next for the home builders?
Well, this, again, you use a different strategy. They were weaker, and then when the Fed came out and said they were going to do 0, it had an igniting bar,
right,
but it didn't hold it. So, it's still choppy. It still has, digestion, I guess, to work off. And you look here at the chart, and you'll see, here is heavy support that it held going sideways. Then, then you had this lower pivot that it ignited from, and then it even, ignited above this downtrend, okay? Here was Wednesday, okay? And if you take a closer look here, you will see that it busted out. Let me get you your little quotes there. Busted out, then tried to have follow through, gave you a red dog reversal, and this is why you use this tactic, especially after what you saw. You saw a move from down here, a secondary move, and then here, this could have been your exit, seeing that it's not ready to continue. And then within a day and a half, took back the majority of this move, showing you that it's still not that strong yet. So at this point, it is still holding right around the 21-day, holding this area. So if you want to trade the home builders, trade them versus 3011. If it starts breaking 3011, you're going to see more weakness in the market.
All right, coming up, we're going to go in the trenches with gold and the TBTs. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We know gold and the gold miners got a real bounce after the Fed's no taper announcement last Wednesday. But was that move real or not? Let's start with the miners. Now 3 consecutive down days here. What does it tell you?
Well, the miners, the day after the Fed gave a nice dose of skepticism. Same way a few weeks back when they actually had 2 big engulfing days to the downside before gold gave another dose of skepticism there. And when you're trading these type of groups and they have a lot to prove because they've been trapped in pretty harsh downtrends in all of 2013, you want to take it step by step. And way too many people went out in the media and started talking about a new bull market in gold and the miners and get on your horse and go. And meanwhile, the way that could have been proven is if you had commitment to the Fed day move, which we did not have, and the miners helped lead the way. And if you look here at the chart, you will see, first of all, look at the trend that the miners have been. This is last year, or actually 2 years ago. Look how this downtrend, then it broke heavy support, and then another downtrend, and it's been trying to figure out whether or not this lower area can hold. You take a close look at what happened on Fed day, and you will see. First of all, 2 different ways. I'll get to the other one. This was your igniting bar on Fed day after holding this minor uptrend since the lows back in June. Took back, what is this, almost a third. So right there you had to be like, shouldn't have taken back that much considering the drubbing that this thing has had. And if this was a historical bottom, you would have seen probably more buy interest. And then by the second day, it almost got rid of the entire Fed move, and now it's almost below the line, showing you nothing much has changed. You go to gold, that also has been trapped in a pretty harsh downtrend for most of 2013, starting here, lower high. This is when this area or this trend broke to the downside. This is when macro support broke to the downside, and then here you go. So with that being said, this is your closer look. Here was your blood in the street lows, which gave us a nice trade. Here was your continuation trade before stalling. And then right here was Fed day. Look at the size of this bar. Gold, though, on Thursday held pretty well, and it held well while the miners came in a lot further. So right there you could have been like, let me be a little bit careful here. And then PS, Friday, this is what took place. Yesterday, this is what took place. To me, it's not looking like much has changed. It's below all moving averages. Gold bugs must be bugging out because your opinions are not being backed up by the price action of the metals.
And meanwhile, also being affected by the uncertainty that the Fed has created is the TBTs, pulled back another almost 1.3% yesterday. But at some point, we've got to believe that the Fed will taper. We've got to believe that rates will rise. So does this theme that we've talked about so much for 2013, the theme of rising rates and the TBTs, remain intact?
It does, but the trade and the speed changed. It was pent up. It was moving fast. You could have bought dips real quickly. We're holding the 8 and 21 day now. It's having trouble with the 50 day. So that tells you as an investor, take a step back and wait for better prices. I do think at some point, I think it's probably December versus October as far as the taper. So you have probably some time. And if you look here at the chart of the TBT, there's been lots of spots, lots of nice spots to get involved. Okay, first of all, here was when it came off the lows. There was a nice gap right here that we talked about. Then you had a pent-up move following the 21 day, and then 80 was our target for the year. And we hit it early, so you could have taken some off there. Plus on this little breakout failure, and now it's just starting to get below this trend line. Okay, if you look closer here, you will see that there is that trend. For a while it was following the 8 and 21 day moving average, and then that changed right there, and now it's starting to break a little bit. So if I were you, okay, there are probably other trades out there that might be working a little bit better. Wait to see how it handles 73.28. I think this could be a better spot if you sold strength or you're only in tier 1. This would be a spot to look, and then this is your gap from here. So right around this area would be a very compelling time to measure or not whether you want to get yourself involved in this trade for what could be a nice move for 2014 when perhaps the tapering starts and we get back on that track.
Right. Well, all right, let's do some quick hits here and talk Apple surging 5% after announcing record weekend of iPhone sales. So no matter what the Apple bears say about the stock, they just make products that people want.
Yes, and just a matter, does it reflect in the price of the stock?
Right.
And you just said you got one, didn't you?
I ordered one, I did.
All right.
I got sucked in.
It's like, well, it happens. They're good products.
Right.
The question is, what's the demand, what's the valuation, and what's sentiment? And can Apple regain its footing, hold higher, show commitment, and can you trust it as a trade? So it seems like Tim Cook did something he hasn't done in a while. He actually put out a pre-release, something, off the beaten path. Maybe he's talking to Uncle Carl, who's telling him how to keep a story exciting. But anyway, with that being said, you look at the chart, you will see here that you have this lower area, okay, which is an accumulation area after a big move a year ago from 700. Here's the earnings gap that wound up giving us a really nice trade before hitting resistance. This was event day. This is when I actually got stopped out of the trade. fast and furious move to the downside, but what did it do? It held that original exciting area. And now here's your gap up on the numbers yesterday, or the release. So here's your low to trade against, 482. I think more active traders don't want to see that gap revisited. I think if it could hold above 490, okay, and then start doing a little sideways action here, we can get a nice juicy move through through 406, and then maybe at some point even, above 507 to then get us a trade up to 540. So we'll see what happens here. It went from the A list here down to the B list, and then started to get back on traders' radar, and it could get more active because they still have a potential invite for a new iPad, they have a potential invite for a new iWatch, and now they took some of the earnings risk off the table, so between now and then, it could be all about the price action, and then maybe even China Mobile somewhere in there. So, makes the story still intact, and now maybe the technicals will line up with it.
Right, and a lot of potential catalysts
as
well. All right, well, in yesterday's morning call, we talked about Google and its potential to be the next $1,000 stock, but it did get hit yesterday. What do you think the setup is here? Could we see dip buyers step in for a quick bounce type of trade?
Well, just like, Apple went off my A list, this was on my A list because it acted really well. Last week, it acted well on Friday with the Dow down, but, it got hit, so the momentum got taken out a little bit. Right. So for me, I don't like to sit in Google, I like to trade it. And here is when this descending channel broke to the upside. Then it tried to go again. And again, you look right here, before yesterday's action, it looked like it was ready to go. Okay, I'll make it look bigger here. So this to me looked like if the market was going to hold in there and they wanted another leader, this was on its way. But what happened is I had it overnight. I said I'll add above 906, but my stop was 895 or 894, and then that happened. Not the biggest deal, in short-term trader land, that could hurt. But anyway, with that said, you have another support here at 881. If you didn't get stopped out yesterday, I would say you measure your commitment here at 881. If it were to trade below yesterday's low, come back above, I'd love to see it hold that, go a little sideways, and then at some point get back involved to what could be a better move. But for now, I'm back to wait and see on Google.
And Facebook getting a boost to new 2013 highs on news that it's lifting its China censorship. I know you have to know your time frame here, but what are some attractive levels?
Well, it's just another good announcement for Facebook. I saw so many valuation guys come out in the last 2 sessions, comparing it to like Intel, comparing it to here or there. And unfortunately, some people probably got out or got short, and now it's open to do business in China where it's censored. So anyway, we talked about this so many times this year. It was on my 2013 thesis to go higher. I did a segment with Kramer. I did one with Deborah. And now look where it is. Okay, you look at the chart here, you'll see here is the cup and handle pattern that took a while for this handle to develop with a lot of false moves. If you didn't want to be in on this noise, right here when it gapped up above the prior resistance, that was your entry. Then you look how fast and furious it's been following the 8th day. Here is an entry, there's an entry, here's an entry, there's an entry, everywhere's an entry. Anyway, with that said, here it is. Closed well yesterday while the market was weak. Maybe somebody knew that this was going to happen. If you did not buy it here or here or here, I think you got to think twice and look at your process if you're going to be paying up for 48. I think you got to wait now. You missed what's been a good move, and if you're still in it, congratulations. I sold mine yesterday. Perhaps trim and trail on the news because sometimes they sell it.
How about LinkedIn? It did have some downside follow through right off the open yesterday, but dip buyers stepped in. It was able to close well off the lows. Possibility for continuation today?
Yeah, I think that this started to weaken a little bit. It's also had a monster run. You're talking from like 80, 90 to 280-ish plus. So with that being said, you look at the chart, it's prone to some type of profit taking here and there. This is when it started acting a little faulty, gave up the 8-day, gave up its 21-day, and it's trying to hold above the 50-day. So, for a shorter term guy, I know Sperling's been trying to buy the dip here. You could buy it versus the low here. The low here now is 233. If this weren't, if this didn't hold, you'd have to look at the gap. But ultimately, I think this just needs time. Sometimes there are great setups, sometimes there's not. And even after, this gap up, for a while here, it took a long time for it to develop a new base before going again. If you're a macro investor, I would not be so worried here. Let it just sift out. It's been quite a move since $90 when it also had its own cup and handle pattern where you could see it right. Did I say right? Yep. Right there, on that breakout. Actually, that was about 120. So that's that.
All right. Well, Tesla, just like LinkedIn, hit right off the open, but the damage was contained above the 8-day. So would you consider maybe this just a breather before we see more upside momentum?
Well, again, setups are setups and holding is holding. And last week it looked like it was tight, ready to go above 174 for a new move. Even on Friday, it gave you an extra trade. So here, it just, feels like it needs time. So this is the chart fresh, and, see if you could draw the lines yourself, because all you got to do is take a ruler, draw it across, and you will see very strong trend. Tested the 21-day moving average once, closed below it, and then here was that red dog reversal. That was the one big scare on that Goldman note. And then from there, you had a lot of different entries. Here is an entry. Here's an entry. I'm not going to do the song again. And then right there was your last tactical trade. And then overall, very nice action, right? Held in there, flagging again, and every now and then the trade is more of an A versus B trade, but overall this trend is strong. It's on its road to 200, and I do think we see it. Just again, don't go all in as you get closer to exciting levels.
Right. Well, with all the uncertainty out there right now that we've been talking about, what will you be focusing on as you begin the trading session?
I'd like to play a bounce. I think that down 3 days on the fourth day, not saying you have to bounce, but typically you get something. Not sure what it will be. If we could get a red dog reversal through yesterday's low in the spiders, I'll look for that. Maybe the same thing in the financials. Maybe they go lower, break the low, stop some people out, and then regroup, and then see if that holds and builds. At this point, I'm a little bit more tactical. I'm looking for just the right setups. I think a lot of traders yesterday got a little blindsided, including myself. When high beta got hit off the open, it happens. Hopefully you reduce some risk, and now you're in a better position to tactically make some cash flow and figure out where we could find some footing and then what we could build on. But we don't know yet until the market proves that.
All right, and with that said, that's your morning call for this Tuesday. Happy trading. Have a great day.